Hi, this is Kerry Artak with Wicked Stocks, bringing you an update in the TLT. That is the iShares 20-year Treasury Bond ETF. The TLT is the high volume ETF associated or correlated with the longer term Treasury bond market. It is basically a series of, the ETF actually owns a series of longer term Treasury bonds with maturities of 20 years out to 30 years. So it is a high correlation with the longer term bond, longer term interest rates. Of course, if you've got the just like a bond market, inverse correlation with the interest rate market. So as the TLT drops in value as it has over the last 5 years, the interest rate market is one of an increasing dynamic. And the inverse would be true too. If we were to rally out of here and show strength in the coming months, then we would see declining interest rates as well. But in terms of the TLT, it's a very tradable market, higher volume. It's also why I like it is because I think it gives sort of an early indication of what may be happening in the interest rate market. We're in a longer term bear market right now, meaning longer term trend in interest rates remains one of the upside, increasing interest rates. But, if you've been following the series for the last couple of years, you know that there is this sort of wedge that's occurring between the 5-year descending channel top at 88.28 this week and the horizontal mostly channel bottom at 85.07. And we've tested this area. We've tested the top pushing to within 1%. I don't show the 1% mark on this one, but it is, I do show it here. And we are in the 1% zone again. We pushed into it back in late March. We're back into it again. We can fall away from here, 88.28. This is, if you're kind of a nearer term swing trader, if you like to trade the TLT, as we're pushing into the zone, 88.28 this week, you can play the target at 85.07. Whatever that may mean to you, maybe it means reaching for 85 strike out of the money puts that don't expire for a couple of months. This is probably a 3 to 5 week play if it were to occur. There's no outright sell signal per se, but we are still filling this wedge out. And the path of least resistance right now, no pun intended, is 85.07 to the downside now that we are so close to the 88.28 channel top. But this can't go on forever. This actually comes to a single point in later September. And so between now and then, we are going to get an indication of a longer term move in interest rates, at least as far as the TLT chart is concerned. And if we were to close this week above 88.28, because it's such a long-term line study, I do need that 1% margin for what I would describe as a technically reliable longer-term buy signal. So in other words, if we were to close Friday at 89.16 or higher, in other words, 1% above 88.28, we enter a buy signal that this could be a 3 to 5 month move.
If you're finding value in this analysis, it's only a glimpse of what we offer. Your real trading edge starts at wickedstocks.com. Each week, premium members receive 2 high-probability stock picks. Each one comes with a complete trade plan, including exact entry, profit target, stop loss, and regular updates so you can manage the trade with confidence. You'll also get daily video analysis in the top traded markets, the SPY, the Triple Q, and NVIDIA, highlighting the key price levels, trends, and trade setups we're focused on. Whether you're day trading or swing trading, these insights help you zero in on the highest quality opportunities with clarity. Try it all free for 5 days. Cancel at any time.
We should then reach this 102.14 level. And this is about a 15% move increase in the TLT. A 16.5% move in the TLT is equivalent to 1 to 1.25% change in the longer term interest rate market. And so if we were to close at or above 89.16, 1% above this long-term channel top, we would see it's more like a 13-14% move, but this is climbing a tick a week. So let's just call it 15%. It'll be close to a 1% reduction in interest rates over the next 3 to 5 months. And that's what the TLT is suggesting. And this would be, I think, a realistic target. Now, whether it takes 6 or 8 months rather than 3 to 5, that is certainly possible depending on, volatility and other scenarios, facts on the ground, so to speak. But yes, 102.14 we would begin, targeting. And, this is a scenario where you might reach for 102 strike out of the money calls that don't expire for at least a full year on this. Let's just call it a 6-month play. I like to go twice the distance for the expiration date relative to the perceived time that the target would take. The 6-month move, go a year out, you're basically preserving delta, reducing your theta element, the time decay element, on those underlying options, or on those out of the money calls in this case. Until then, we can fall away from here, as I say, and fall back to this 8507 formation, with 8422 being the 1% downside violation below 8507. Now, 8507 may well contain selling into September, and from here we can round back up to 8828 formation. We could continue to play this out for the next few weeks, but if we close below 8507, yes, by a full 1% margin, because this is a 2-year structure, and you can see how we've slipped below and tagged that 1% line twice now in the last few months since the middle of May. That could happen again, but if we close the week at 8422 or lower, the red line, the 1% violation of 8507, then we enter a sell signal, which basically means an increase in interest rates over the next, this would be the objective, this 6716 full channel extension. This is a pretty solid targeting mechanism. So if we were to close at 8422 or lower, I would see 6716 as a realistic. This could also be a 3 to 5 month target. Now this is about a 21% drop in the TLT, and if you take that math, that really means more like a 1.5% increase in interest rates. Now this could also be longer than 3 to 5 months. This could take 6 or 8 months, and that's what the TLT is suggesting, that if we were to close at 8422 or lower, we can anticipate 6716, the full channel extension, where interest rates would increase. Now what does this mean for the stock market? You could go either way with this. If we get the buy signal at 89.16 or higher, we've got a lower interest rate environment, which typically would mean, that supports a strong stock market. But if the rationale for the buy signal is an ever weakening economy, that's going to weigh on the stock market as well. So it's a bit of a mixed bag. And the inverse is true as well. If we close at 8422 or lower, that typically means it's bearish for the stock market. As interest rates increase, it competes for money with the stock market. It also it could be a sign of inflation, but it also could be a sign of economic growth. And as long as it's not exacerbated, as long as it's not an aggressive sell-off into the 6716 area, but more a gradual process, that could imply just, a strong economy that would lend itself toward a strong stock market. And I hate to be so gray and wishy-washy on this, but that as far as the bond market goes, it's not a 100% indicator of stock market directional tendencies. But as far as the TLT is concerned, these are pretty rock solid levels. And if we were to close at 8422 or lower this week, which is not likely, then we have a significant sell signal through the rest of the year in the TLT. You might reach for 67-68 strike out of the money puts that don't expire. I would go once again a full year out on this possible 6-month downside play. And I've already mentioned the upside scenario, but until then, we're in this sort of two-sided framework between these two very important levels. I think I've said it all, and I'm going to leave it at that for this week's, or this particular. I'm not doing this on a weekly basis, the TLT, but when we are reaching these extreme price points, it's like every couple of weeks right now. I'm going to leave it at that for this particular update on the TLT. You have a great week.